So one of my best friends was in the process of buying her first home, and she had absolutely no idea how much money she needed to have on hand. So this is what I told her, and I'm going to tell you so that you guys don't get caught off guard when you're buying your first home and you also don't have any idea how this whole process works. So when you guys find a house, the very first thing that they're going to ask you for is called the earnest money. And the earnest money is typically 1% of the sales price. Now, she was buying a $280,000 townhome, so this ended up being about $2,800. Multiply 1% times whatever purchase price it is that you're buying. Now, this earnest money is going to be given back to you as a credit at your closing, and that's going to be kind of towards your down payment or your closing cost. But if you fail to close or your loan gets denied or something happens, then the seller can keep this money. So just keep that in mind. Now, the second thing that you guys are going to need is going to be an inspection. And inspections are typically $200 to $300, but the lender is going to require for an appraisal. And the appraisals are typically $400 to $700, depending on the size of the home and, depending on where you are as well. So those are the very first three things that, that you guys need to have as far as money on hand. The two other things that really are going to cost a lot more money are going to be your down payment and your closing costs. If you are a first-time home buyer, typically the lowest down payment available is going to be 3%. And most likely, most first-time home buyers just put the minimum down payment. So just take 3% and multiply it times the purchase price of the home. In the case of my friend, this was about $8,400. That's 3% times $280,000. Now, her closing costs were roughly about 2.5 to 3%, something in that range. Let's just go ahead and say they were about $9,000. But check this out. The seller gave her a credit towards her closing cost, and that credit was for $7,000. So she had to pay the other $2,500 remaining for the closing costs, and then on top of her down payment. The seller cannot give you money for your down payment, so keep that in mind. They can only give you money towards your closing cost. So basically, guys, that's how it all works. I mean, it's really not that complicated, but just to recap, and, if you want to make sure that you have all the money in order to make your deal happen, you want to have your down payment, which is, at least 3%. You want to have the money for your closing costs in the event that the seller doesn't pay for them. And that's going to be anywhere between 2 to 3%. But then obviously appraisals, $400 to $700, earnest money, 1%, which is going to be given to you back as a credit when you buy the house. And then the inspection, which is going to be for you, that's anywhere between $200 to $300. So hopefully this helps you guys. Let me know in the comments if you have any questions. All right.